Kevin, Dan. Hope you guys are doing well as well. Okay, live stream just getting rolling. It just takes about 10 seconds and we are good to go. All right. So we are live. We are rolling here. Let me go ahead and share my screen. There you go. You should see that. All right. Oh, I didn't change the date, which is the whole point of putting that lovely picture there. March 24th, 2025. All right. We are getting to the back half of March. March 24th is my youngest Evelyn's 1-year-old birthday. So that's her. Happy birthday, Evelyn. Turned 1 today. She went to town on that smash cake. She didn't use her hands the entire time, just straight with the face. Never even touched it with her hands during that entire process. So she's a girl after my own heart. I respect her at a whole new level on her 1-year-old birthday than I ever have before, based on that cake eating display. But it is March 24th. We are getting toward the very end of Q1, which just seems hard to believe. But here we are in Q1. I don't know about you, but I'm very happy for Q1 to be over based on where we are and where we've been in the market so far. Now, sector-wise, pretty interesting. XLY has been the biggest drag down in the market. It has been, beating us up. It has, along with technology, been the reason that we are in a 10% plus pullback, or we're in a 10% plus pullback. Obviously, now driving. Everyone know what's driving XLY today? Pop quiz. Everyone know where XLY, which is consumer discretionary. Gaston is on it. Yes. Anyone else know? We are getting a $100 billion pop in one particular stock in the discretionary. It is Tesla, which we talked about last week and essentially called the bottom on Tesla on this call just 7 days ago. So Tesla is driving XLY. It is up over close to 2.5%, which is a big part of lifting the entire market. But good to know that financials, technology, and a few other sectors are also significantly up, and everything else is up a little bit. So we're not getting major divergence. I mean, we're getting a spread here Monday morning, but we're not getting major divergence where we have other sectors rotating into the negatives. That's really nice to see. XLF now being up over 1.5%. Great for those of you who are in the XLF trade with me. That one, got off to a really nice start, obviously, on a big Monday open. So everything's looking positive, but Tesla is overdriving the market. So that's one thing also to keep an eye on. Tesla, might pull back a little bit here. And, if that does, it's going to drag some of the market force behind it. But I still think it's a pretty darn general sign overall. And looking forward to seeing Tesla hopefully continue, which is one of the stocks we'll talk about here in a moment. As far as the weekend trade update that we gave on Friday, that was kind of a crazy one because we gave it here at about 2:15 p.m. If you guys were on the Friday session, actually about 2:05 p.m., I believe, if you guys were on the Friday session, and then it actually ended up hitting on that spike toward the close. Excuse me. So this was the trade here on the SPY. This is a 15-minute chart. Hit the target right here at about 3:55 or so. And some of you told me the exact time you got filled. I think around 3:55 p.m. is when it got filled. So the cool thing about the weekend trade here is that it took such a small move. Now, I talk about why it took such a small move in the weekend options, which we'll play at the end of this presentation. So I'll talk about that in a second. But for those of you asking about the weekend thing, we'll play the entire presentation. We still have time left. We still have spots left until Wednesday morning. So you'll get a chance to see that entire presentation on weekend options. Just hang tight. We'll do that at the end. But the really, really cool thing about this particular trade is that even though we're playing all this extra volatility for the weekend, which, by the way, we would have hit a beautiful winner regardless. But in this case, it's just cool to point out how small the move is. So this was a very small move that hit the target, and that's all because the way the trade works, where it's starting to take into account that volatility. So it's pre-pricing in that negative volatility. That's, by the way, mostly not real. The data shows that it's really because of a couple outliers that they have to price in all that negativity. So think about it. If you're pricing in all the negativity right here, basically you're pricing in downside, and then you just get a little move up, it's going to value how do I say that? It's going to overvalue that little extra positive move. And that's why our target got hit so darn quickly on Friday. So a whole bunch of you guys wrote in. I know some of you already were in here. Thank you, Doug, Bob, Sam. I know Derek was in there. A couple others were in there too. Aaron was in there. So thank you all, those of you who wrote in, letting me know that you got a winner on that trade. Always fun to see people get a winner, especially on a free trade. Okay, let's go ahead and talk about where we are on the S&P 500. So this is the S&P 500. This is a weekly chart that we're looking at right now. So we are looking at where we stand on the S&P over the weekly time. And we basically said, listen, it's tempting us here. 557, this line that I have, it looked like we were snapping right through it just 2 weeks ago. And then we had that big Friday pulse. Remember, it was 2 weeks ago that the market was down the entire week. And then the last 30 minutes, we had that big pop, just driving the NASDAQ over 1%, driving the SPY, I think 0.75%. And all of a sudden gave us some life here that maybe we had found a bottom, right? Then we got a kind of a stall week last week. And right now, got a nice little pop to start. So we're going to see again if we can hold this up. I think an incredibly good close for the week would be above 580, but I don't even think we need that in order to give us some optimism that this thing's going to continue. Now, I think your immediate target on the S&P with some positivity is not all-time highs. I think it's just kind of somewhere in the middle here. It's kind of a 50% retracement. See what happens there. If we get some continued momentum, then we're looking at all-time highs. And I think you can trade them with a fair amount of confidence, frankly, if we can make our move through there. But the first target, the first thing you got to look for is not all-time highs or bust. Just kind of pick a mid-range here, see if the market hits there, and then be patient and see kind of what we do there. Because it might take a couple of weeks. We've seen that over and over again, like around these tops, like around these bottoms, around these breaks, where we take a little bit of time. We take a couple of weeks to figure out if we're really making a move. So you want to be patient and recognize that could very well happen somewhere around the midpoint here on the S&P. But I think the bounce might be real. Now, there's a lot of reasons that I'm cautiously optimistic about the bounce. Graham shared these on the roundtable. I shared them again at our 3:30 session on Friday, but I'll just jump through them real quick here. So number one, this was that chart that Graham shared that's showing all of the really quick corrections. So these over here are the fastest 10% corrections, which we just had one of the fastest 10% corrections in February going into March. Okay. All of them led to very positive results looking forward 3, 6, and 12 months. So what these really fast corrections are not typically a move into a bear market. They're just a flush. They're a market flush, a liquidity flush, and they typically lead to very bullish signs over the next 3, 6 months because you flush all that money out and then you get going again. So that could be exactly what we're seeing right now, and history would be repeating itself. Keep in mind, like I said, 2024 had one of these flushes. Sometimes we forget because it didn't quite hit that magic 10 number. We forget that 2024 had one of these flushes right in the middle. I actually had this quick flush as well, but it had one of these flushes, and then we just zoomed up to all-time highs and had a monster year in 2024. The very same thing could happen here. I'm not saying it will, but I mean, just put some context in place here. That big quick flush doesn't mean we're heading for recession. In fact, historically speaking, it absolutely doesn't mean we're heading for recession. So keep in mind, this is what we might end up getting. A little bit different context because we weren't moving heading into this. Unlike 2024, where we were ripping heading into a market flush, we had already kind of slowed down, and then we got the flush. So that is different. Different kind of, scenario altogether from just a flush of overextended market to now just a straight liquidity flush. We'll see, but I think that there's definitely an opportunity this could end up being surprisingly bullish in the coming weeks and the coming months. I'm personally expecting Q2 to be very bullish, assuming just a couple things come into play. Don't forget this one. Bearish retail investors typically mean very good things for the market. This was in 2020 or 2010 at the very bottom of the 2008 collapse. By the way, this was early 90s before the massive tech bubble run. We got up pretty high here after the tech bubble. We got up here really high again after COVID before the big run, and we're up here again. Okay, so this is normally a very good sign of potential bullish markets when the retail world gets very bearish. Also, like Graham shared, I'm stealing all of the slides right now. The second week of March, very common for lows. This was March 13th, right? So we're mirroring potentially what we see over here as a very common kind of decision point or stopping point there in the bottom of the market. Now, I want to see two things happen before I'm really all in. So the first one is I want to see insider buying increasing. I shared with you, the retail trader is one side. What I really want to see matched with that is insider buying. So when 2008 peaked and retail was at its most bearish, insiders were at their most bullish. Here again, when we had that 2012 collapse, insider buying picked up. Here again during COVID, again, retail was bearish, insiders were buying, right? So this is something that we typically see in tandem when the market's really going to rip. This is a little bit delayed. We're a little bit higher here, but I'd like to see this move and get a little more bullish from the insider buying. And that combination of retail being bearish and insiders being bullish, I think is about as strong of a medium-term signal as you could hope to get. And we're kind of getting into that territory right now. The other thing I want to see happen, so that's number one. I really want to see that happen. The other thing I want to see happen is I want to see the Magnificent Seven continue to drive. I shared on Friday, I'm not someone who really believes that we can have a great bullish market while the Mag 7 fade. I don't think we can rotate enough into energy and industrials and financials to get ourselves into a strong bullish market. I think that we have to have the Magnificent Seven driving. They don't have to necessarily lead the pack, although even that I find hard to believe that they wouldn't in a good bullish market, but they can't be negative. They can't be sideways. The mega caps have to be winning, and we need to see that. So today, really great sign. Friday at the last end of the day there, we saw them pick up as well. Right now being driven mostly by Tesla, but everything for the most part in tandem, at least up to some degree. And so when you've got a couple $1 trillion across those stocks, so what do the Mag 7 have right now? Like $15 trillion or something in market cap. I mean, I forget the number now, but it is a massive number. And with that not driving and the index is still weighted very heavily, I really find it hard to believe that we're going to get that kind of 2024 recovery like we saw after the August flush happening in 2025. The good news is I think they have every reason to do that. Their earnings are still good. They already had some overcorrections. Obviously, Tesla, insane overcorrection. There's lots of reasons to think that they could still have a ton of upside. And so if we get positivity in the market, I do expect Mag 7 to drive. And if Mag 7 drives, I do expect to get continued positivity. So chicken and the egg there, continuing to rotate. And as long as we get that, I'm going to feel really optimistic about Q2. This is that level. I don't think this is the most critical level here. We kind of had this stopping point before. I think, just trying to get up somewhere like a 50% correction on this pullback here is probably where the rubber meets the road to see if this is just a correction before a move lower, or if we're actually getting back into bullish territory. And we'll wait and see. But I think MAGS, Magnificent Seven, if you guys want to write down that Tigger, it's MAGS. And I recommend watching it because I think for the most part, it's going to lead. If it's breaking down, you're probably going to see the NASDAQ break down. If the NASDAQ breaks down, you're probably going to see the S&P break down. And so it's probably going to give you a pretty good indication. Okay, one question I have for everyone that I meant to follow up with earlier last week, but I didn't, so let me follow up now. Is everyone on my text list? Are you guys all getting my daily text message where I just put out a stock, say, hey, here's the stock I'm watching? Normally it's a medium or longer term stock play. Does everyone have this one? Okay, let me put the link in. If you do not have it, you just go right here. Oh, wow, a ton of you don't have this. Okay. Go right to that link that I just popped in the chat there. Click that link. It'll open up a page. It looks something like this. Okay. And then you just pop your phone number right here and click the button. And that will get you on the list so that I text my favorite stock each day. Like I said, usually kind of like a medium to longer term stock, but every once in a while, I'll put a short term, kind of holder opportunity in there. So just make sure you click that, add your phone number, and then keep an eye. As soon as you put your number in there and you get a confirmation text, it'll say like, hey, it's Nate Tucci, add me to your contact list. So just right there at the top of your phone, click and put me in as Nate Tucci so you actually know when I'm texting you versus, some other message that could be popping up, or because it's just like a phone number code. So make sure you get the text message, click the top, put in my name so that you know that it's actually my messages coming. Because I write those stock of the day messages myself. They get sent out. Those are actually from me, and I want you to know when you're getting a text from me. So try to do that today. That link should open up for you, and you can just put your number in there. Okay, let's keep on moving along. Speaking of my stocks of the day, the stocks that I like. So LLY is a stock that I like quite a bit. I really think that 900 is a pretty easy level here. That's a couple bucks below. So I think that it's a pretty easy target, frankly, for LLY with the way that it moves. LLY has been in one of the longest corrective patterns that we've seen literally in the history of the stock, because it's an absolute juggernaut of a stock that continually makes all-time highs. But it's been in a sideways period. Lots of that came from the initial health pressure having to do with RFK and the Trump administration, all kinds of stuff. But ultimately, I think their sales will continue to be very good. And until, like maybe longer term regulation is passed, I don't see how LLY doesn't make a lot more positive moves in the medium to long term. So this is the first one, kind of cracking back up through this 860 level, and I think 900 is a good target for LLY. Like I said, so this is the 925 or 930 level in here. So you're basically just playing it halfway between those two levels. Again, a very gettable target in my view for LLY. Last Monday, we talked about this. When is it time to buy Tesla? Who all was here when we talked about Tesla? We talked about the fact that we're now in the range of the extreme Tesla pullbacks. So this was the chart that I shared from last Monday. Hopefully you were here. 49, 42, 72, obviously a bigger one, 54, 62. This was a quick 50% flush. This definitely got us to the point where, it started to become interesting. Well, just fast forward to today, and Tesla is moving. So we essentially kind of called the bottom there with Tesla last week. It's already up almost 20% since that point. And I think Tesla has all the potential in the world to run. I called it the best risk reward opportunity in the entire stock market. And I still believe that. I'm not like a Tesla ride or die person. As a matter of fact, wasn't that long ago that I was saying I think Tesla's overvalued. We need to be shorting Tesla. But 52% pullback obviously changes the value structure quite a bit. And so for me, this is still the best risk reward out there. I'm not a Tesla diehard that I think it's definitely going to be the greatest stock on the planet. It's definitely going back to all-time highs. I don't necessarily have that level of confidence, but I think it has a greater than 50% chance of going back to all-time highs. And so if you think about that, if you agree with me, that it has a greater than 50% chance, and you can buy at this price, or you can trade some long-term options that could pay you a 10-to-1 or a 20-to-1 risk reward on something that I believe has a higher than 50% chance of making all-time highs. Well, I mean, do the math. A 1 in 2 chance of doing it and a 20-to-1 chance of paying out makes sense to do, right? So for me, that's really what it is. It's more of a risk reward play than anything else. And, I think the opportunity to trade it immediately is just trade it in this 340 level. Okay, so don't even target all-time highs. Just trade it right here into 340, kind of a 50% correction there on Tesla. And I think you have maybe a 70% chance of it hitting that in the next couple of months. So for me, again, just a risk reward play here on Tesla that I think is the tide is starting to turn. It doesn't have to turn immaculately to all-time highs in order for it to be quite a good opportunity. So that is our next one. Okay, then we have GE. Okay, so GE, one of the best stocks out there, an aerospace stock now since the split. We mentioned HWM last week, another aerospace stock, but GE is probably the stronger, more stable one. The thing that I like about GE, besides the fact that I think it's right about to break all-time highs here and potentially go higher, you notice that the target is question mark because there is no target on this one. It's just to see how high it could go if we get a break above 210. One of the things that I like about GE is that it is government funded in as far as a private company goes baseline. So, whether GE does anything good or not, they have billions and billions and billions of dollars coming in from government contracts. And so that's a pretty good baseline to start out with as a company. It's also one of the reasons I think SpaceX is, if it were public, like I said, some of the people have the private equity and it's done very well. But it's hard for a stock not to outperform baselines when it already has an incredibly healthy baseline guaranteed to it by government contracts. And that's the position GE is in. I think that GE is going to get a tailwind from SpaceX, from Elon, from all the talk, from Joe Rogan talking about exploring space every week. I think like those are legitimate tailwinds for companies like GE and HWM. And I think one of the things that we've learned when companies get big tailwinds like that, whether it's Nvidia or Palantir or any of these other ones, the upside really is tremendous. You can get excited and see that play out in the market and have incredible, MSTR, another example, have incredible upside even before the upside is realized. And I think aerospace falls in that category. And I think GE is probably the next best player after SpaceX in that category. Okay, and then a little bit of a different one is OKE. All right, so this is Oniok. This is an energy company, pays a nice dividend, has been a really, really healthy trending energy stock, and is making a potential break here. A close above 101 this week, I think, makes me pretty confident in OKE, trading it all the way back to all-time highs. And the great thing is, even if it takes a long time to get there, it pays a nice dividend. So you can just kind of hang tight, enjoy the dividend, and wait for it to make move and gain value, which I'm pretty confident that OKE will. I think it's one of the better energy stocks out there, one that I've always held, not always, but held for a long time, and I think is worth holding. It'll be really interesting to see how the whole energy sector plays out deeper into the Trump administration, deeper into tariffs, and everything else associated with that. But OKE, more of a natural gas specialist, is one that I like quite a bit. All right. And the last thing, of course, today is talk about weekend options. So we have less than 24 hours. Wow, can't talk. Less than 48 hours left for the weekend options early access. So for those of you who don't know, I built this weekend option strategy, really had no intention of releasing it earlier. Got some pressure from Graham, asked all of you guys. You said yes. So we rushed it out and did a kind of an impromptu presentation yesterday at 2 p.m. Filled like half the early spots already just in 24 hours with basically no prep whatsoever. And a whole bunch of you guys got winners already on the first trade, which is always fun. And so for those of you who are still waiting, asking questions about it, we are going to play the entire presentation. So you get A to Z, nuts to bolts. So you don't have to go anywhere. We're going to play it right here inside the Zoom room so that you can watch the entire thing and hopefully jump in and get access. Just quick heads up how it's going to work. We'll talk about it today. I'll talk about it tomorrow. If we fill the 500 spots that we're eventually going to open up here, we'll close it down. If not, we'll close it down Wednesday when our class kicks off before I head out to Pebble Beach, because I want to get everyone onboarded. I want to go through the class. I want to make sure everyone has everything they need to get locked and loaded and be ready for our first trade and hopefully make some money together. So it is a legitimate tight window. And if you want to get in before that tight window ends, just hang tight. You can watch the entire presentation here. So thanks so much, everyone. Let's go ahead and get that started, but appreciate all of you guys being here on another Mapping the Market session. Hopefully this is valuable. Give me a yes in the chat if these sessions are valuable, if getting the stock picks directly in here is valuable and the broad market. I always want to make sure that I'm not just talking for my own sake, but that you guys are enjoying it and you think it does something, adds something to them. Okay, perfect. Well, thank you. Appreciate you guys. Summer, Thomas, DDC, Barbara, Babette, Mike, Erwin, Karen, Dennis, Catherine, Dexter, Mark, Scott, Cameron, Bob, Vivian, Carrie. Okay, you guys are going too fast, Becky. All right. Celeste, thank you, Sam. Appreciate you guys. Okay, hang tight. We're going to kick off that presentation right now.